Hello everyone, and welcome to our new episode of Fintech Garden Weekly Harvest Review. Today, as usually, me, Dumitru Condrea, and Igor Tomych, my co-host, we are providing you some free, fresh news that happened this week in Fintech world and finance world. Hello Igor, how are you?
Hello, Dima. I'm good. It's almost the end of the week, and today we are going to discuss three freshly harvested items that we curated for you. So bear with us. It's the last week of the spring, and the summer is coming. I hope everyone will join us on the Money 2020, and today is the last episode of the spring. So let's kick it in.
First, and the most important news that happened in Fintech world is on May 19, Trump administration and Trump itself signed an agreement, an executive order, where basically all the fintech companies, inclusively the crypto companies, have access and can dive deep into financial regulation system, and the Federal Reserve System has to onboard those companies, or at least to take an overview how to onboard those companies more deeper into the Federal Reserve System. Basically, it means that fintech companies in the United States, inclusive of the crypto one, will have access to master accounts, to Federal Reserve. They'll have access to settlement accounts, customer segregated accounts, and they will be able to operate and to build a competition alongside traditional banks into the chain and network of transactions, payments, settlements, and so on. It's very interesting news because it came somehow unpredicted for those here in European Union, or at least for myself, it was unexpected news. But basically, it creates the fact that they are opening totally the market for fintech companies that will participate as equal with the banks in a lot of things. Very similar what's happening in Europe already for years with electronic money institutions that can compete with some banks on the level of settlements, payments, card issuing, and so on.
I think a lot of people underestimate how an access to the financial infrastructure is limiting the companies. Because if you're a fintech in the United States, there is a really high bar which you need to pass to receive all the federal licenses, because you cannot just apply for one state, because you need to collect all the states for working. And that creates, in my opinion, a little bit artificial barrier for the fintechs to operate and open accounts. So usually as a fintech in the European Union, there are a lot of banking as a service providers, which you can work, and even in EMI mode or without the license, with using license umbrella, you can have an access for opening accounts. And opening an account and having the ability to receive the incoming transfers, dispatch the transfers from customer-facing application is essential part of the business flow. Everything starts with that. Everything is built with the understanding that you have the store value for your accounts. So this change, in my opinion, will allow a better integration for the fintechs, and which is importantly for the crypto companies, because despite having the huge trend on the market, they still limited with the numbers how to receive the fiat and how to withdraw the fiat. And I think with this movement, the maximum focus from the administration is to allow those companies more even access compared with the banks and banking infrastructure for the crypto companies. Although the paper itself doesn't say that it's exclusively for the crypto. So it will allow more models on the market and much easier access for the players in this market.
The market implications is quite easy to underestimate, because if regulators will push hard to execute the order, it means that a lot of innovations will appear on the market, at least in the United States. Well, this order, also we have to make some notes here that this order doesn't mean automatically that fintech companies in the United States or worldwide will have access to Federal Reserve System or Federal Reserve ecosystem. It's not. It's just an executive order that is requiring from the regulators, such as Federal Reserve or other regulators, federal regulators, also it's important to mention here, that they have to integrate, or at least to analyze and to build some roadmaps how to integrate the fintechs in the ecosystem. These regulators will push hard on the market and will push hard in the implementation of this order. In several years, the United States can be above a lot of markets like European one or Asian one in regarding implementation of some new know-hows or new technologies, new approaches, and so on. At the same time, it creates for the banks some shaking of the market, because they are not sure right now if they still have a monopoly on participating in the transactions ecosystem, or they have to share the pie with some fintech companies. We'll see. Maybe behind of this exists some political arrangements. Who knows? Well, at least in the next 2-3 years, it seems like United States financial ecosystem or transactional ecosystem will change a lot.
So the second news is astonishing news for the fintechs combined, because this week 14 deals has been closed with the total amount 757 millions, and which is really good. And one of the primers, 100 million Series C, leads the pack. So it shows that fintechs still boiling, and there is still an appetite from VCs, and the development is happening with the speed up, with all AI and vibe coding maybe happening in the market.
It's interesting the fact that this week was identical to the week before this regarding the amount of money raised, the amount of deals. Both week, 14 deals, both week, very close to 800 millions. We have in 1 week, in the previous week, it was Mercury, who was more than 100 million. This week is Prime with 14. Things are moving very well. The last 2 weeks are super hot. It's, the peak season before summer. As you said, Igor, it's absolutely proven the fact that the fintech market is already established, because this is not the raises that came only for startups. It's round C or even D for a lot of companies. We have a lot of companies that were raised something between 60 and 80 millions. So 14 deals beside Prime or Mercury, who raised more than 100 million. The rest 13 companies in both of the week raised up to 650 millions. Which prove the fact that a lot of money ready for investments in fintech. By sure, in summer we'll see some pause on this, and in September, October we will see a restart. Things are moving very well. I think the next year, the main topic, the main accent will be in crypto investments, in settlement, in probably that will offer some automatization settlements, and offer my personal opinion is also it will be some companies who will work alongside the KC and the KAB solutions. But yeah, let's see where the market will go.
And the third news for today is that Mastercard secures New York BIT license, one of the most hard to get licenses, which technically gives an ability for Mastercard to start operations in New York with the stablecoins. It shows that despite being the card network of fiat, companies like Mastercard, they thinking, and not just thinking, but also doing actions to jump into the stablecoin market, which I think will still continue to show high interest and no downside for those companies, because it's helping and steaming the PR and marketing in this area. So next week, I think on Money 2020, we will hear more news like that. But that's a good sign that right now that's a hybrid model, and fusion between fiat world and the crypto is basically a present, not even a future.
In our previous episodes, we spoke about the fact that Mastercard and Visa is looking very seriously into processing of stablecoins. A lot of actions they did, a lot of initiatives and so on. The license itself, as you mentioned, Igor, the hardest one to get in America is proven the fact that are moving to this. And I think in the next 2-3 years, they will start really to operate for processing of stablecoins. Mastercard already have all the infrastructure prepared. And we are waiting to see Visa what they are doing, because Visa is the most crypto-friendly card scheme, and very big expectations from Visa regarding the steps of implementation of stablecoins processing and so on. We will see in the next 2-3 years a big impact of crypto stablecoins on the international payment schemes and the card schemes. Well, that's it for the news we had for the last week. We'll be happy to see you at the Money 2020 next week. So in case if you're watching us and want to organize a meeting or to discuss, just ping us. We'll be happy to see you and to have some discussions. Thank you very much and have a nice week.